So we've got Cern Basher this morning, and he is not a happy camper. He is, wondering what in the world is going on with his friend Scott Walter. He's thrown out the gauntlet. He's put the challenge into space, so to speak, this morning. Cern, what do you got to say?
I am waiting for Scott to come back with better jokes than what I had. Now, granted, my jokes were terrible.
I,
I've been told by a number of people they were worse than dad jokes. And so that's quite a high compliment in my book.
yeah, exactly. I have this theory about dad jokes that comedians, okay, highly paid, highly trained comedians, work their jokes. They practice them over and over again in front of crowds, getting a time for responses and everything else. They get up in front of another crowd, and some of the jokes still go sour. Sometimes their entire evening goes sour. Dads, on the other hand, are making them up on the spur of the moment, and no idea how the crowd's attitude's going to be. Don't get a chance to rehearse, and if 1 in 3 land, that's a miracle. That's my theory. What do you think?
I think that sounds pretty good. Yeah, I think 1 in 3 would be a great track record for me when it comes to joke telling.
Okay.
It's a dream. That would be a dream.
a dream result. All right. So I understand that you have graphs, charts, all kinds of fun stuff for us this morning. I have no idea what even the subject matter is. It's going to be a big. My birthday is Saturday, so this will be a birthday surprise for me.
All right. Well, let's launch
Pulling
this.
the ribbons. That's a good one.
Yeah. So this is a nice metaphor, I think, for some of the things going on in the markets right now.
Yes. Yeah. Right.
But anyway, yeah, this was
Which
a
market?
press this morning. So yeah, that was the third launch, making progress for sure.
Absolutely. Huge progress. Absolutely.
Yeah. So let's take a look at the stock market.
Okay.
Over the last 30 years, the S&P 500 has gone up 840% if you adjust for inflation, consumer price inflation.
After inflation. Okay.
Yes. So not too bad.
Not
And if
too bad.
you decided that the stock market was too risky and kept all your money in cash, the purchasing power of your dollars have been reduced by over half.
Wow. Yeah.
Right. Now that's assuming that your inflation rate is the same as CPI, which might be right, might not be. Your inflation rate could be higher than CPI.
Right. Right.
So
So,
I thought it was,
so you're saying half in 30 years. So, in other words, double the dollar is, you take any kind of a price in 1994, just double that. It should be roughly what it is today. I like to do that kind of stuff because being born in 1948, if you look back in the 50s, you have to 10 times the prices of the 50s to
yeah,
get to today. So the inflation between then and now has been worse than the last 30 years, but still, that's pretty significant inflation.
that's right.
Yep.
That's right. Yeah, inflation's been pretty tame actually the last 30 years, all things considered.
Right.
Let's shorten the time frame a little bit to the last 15 years.
Okay.
If you were the genius that you are, you probably bought stocks at the March low in 2009, the bear market low, March 9th. And if you did, you're up 916% or 16.7% per year if you would have bought stocks at that time.
Right.
Now, I know you did that, and that's great.
So that now you have a better joke that Scott has to beat.
Easily. The bar is very low for Scott to beat my jokes. Yes, I'm still waiting, Scott. So on the flip side, what happens if you were terrible at market timing and you bought at the peak
Ah,
before this bear market low?
yeah.
How do you think you would have done over the last 15 or so years?
I'm guessing awfully well.
What number would you hazard a guess?
Let's go with 12.5. I have no idea.
Okay, well, not quite. Almost 10.
10. Wow. Okay.
Pretty respectable given the fact if you top ticked the market in October of 2007 and then suffered a 50% decline,
Yeah.
assuming that you were able to hang on and said, you know what, my decision making was good. I decided to buy stocks for the right reasons and held on, you would be up 354, 55%.
Or 10% a year, which is an even more important statistic.
10% a year.
Yeah.
Yeah. It wasn't a smooth ride. As you can see, there's some
Right.
bumps in this chart.
Right.
So anyway, I thought that was some good perspective.
Sure.
Now, as we sit today, measurements on bullish sentiment have hit highs or relatively high levels. So if you are at all any kind of contrarian, this is a little bit of a warning sign that people might be a little bit overly bullish.
Right.
But, you know, it's just one of many things you could look at. But I thought this is, you know, just a word of caution.
Yes. Yes.
Now, the other thing offsetting that a little bit is there is a ton of money in cash.
Right.
$6 trillion is sitting on the sidelines. And it's increased by 1.2 trillion in just the last year, and it's doubled in the last 5 years.
Yeah. Wow.
Right. Now, it's also a function of the money printing that we've seen in the last 5 years. All that cash has gone somewhere, and a lot of it's just sitting idle, sitting in the banking system, shoring up the banking system.
Right.
But if any amount of this is invested in something, then those somethings will go up.
Yes. And right now it seems to be going into Bitcoin.
We'll discuss that in a bit. Yes.
Oh, okay.
Yeah. And that may be the first image of the rocket ship there. That may be a good image for that.
Right. Right.
So normally cash goes up a lot during recessions. You can see the shaded area on the left side. This time cash is going up even though the economy's been, you know, kind of humming along.
Yeah.
Okay. Now, certainly 2020 and the pandemic unleashed a lot of cash.
Right. Right. Right.
All right. So this is another nice chart from Charlie at Creative Planning. He puts all the different asset classes there on the left side and then shows you their annual returns. Green is up and red is down.
Okay.
And it's just kind of a nice visual that often when there is a bear market, pretty much everything goes down. 2018, the only thing that was up was cash. 2022, the only thing that was up was cash and commodities, had a good year. And then typically when the markets recover, everything is green.
Right.
Or perhaps except for the things that went up when the market was going down. Now, the one thing that sticks out on this chart like a sore thumb is the cumulative return on Bitcoin. It is kind of staggering.
Yes.
Right. And if you look at the annual return there of only 155% per year.
Per year. Yes.
Right. So we can talk more about that sometime, but let's just let that sit for now.
Sure.
Technology stocks, the NASDAQ 100 has averaged 18% per year since 2011. US large cap stocks, 13%, and so on down the list. So I just thought that was a nice presentation of a lot of data on the one chart.
Yeah, pretty interesting on the small caps, 7.7, which isn't horrible, but which is surprisingly so much less than the large caps and the growth stocks.
Yeah, I have small caps here, 9.2 average.
Oh, I'm sorry. I was looking at the 7.7. What was that?
That is the US REITs, real
Oh,
estate
I'm
investment
sorry.
trust.
I didn't look at it well. Okay. All right. 8.7. Okay.
All right.
9.2 rather. I'm sorry. 9.2 on the small. Okay.
Yeah. Now, in the stock market lately, we've seen just a few big companies produce a lot of return. And this is year to date as of March 7th. So it's a week old now. Nvidia at that time was up 87%. Meta up 45, Netflix up 25, Amazon up 16. So those big companies have caused the S&P to go up 8%. If you take them, if you just equal weight all the companies in the S&P would only be up 5.
Okay.
So it's telling you that there are some big companies sort of dragging up the average.
Sure.
Now, not every big company has done well so far this year. At this point, Apple was down 12% and Tesla was down 28.
Right.
Okay. Now, something interesting is happening, and we've all been talking about is the rise of Nvidia, and it's getting close to Apple's market cap. Although since this chart was made, Apple has bounced a bit and Nvidia has come down just a smidge,
Yeah.
but it is still highly possible, or who knows, whether, Nvidia will cross the market cap of Apple. That would be an interesting moment.
Yeah. Yep. Yep.
Okay. Now, the question is this warranted? Right? It's one thing to have a huge market cap, but does the business growth warrant this? And so right now, Apple has 6 times the revenue and 3.3 times the net income of Nvidia. Now, this reminds me of when Tesla was rising and becoming bigger than Toyota, and then bigger than 3 of the automakers, and then bigger than all the automakers combined.
Right.
Right? So it's not just comparing market caps, it's comparing the business prospects.
Right.
And the market, if it is correct, it is telling you that Nvidia quite likely could have earnings as high or higher than Apple at some point. And that would be astonishing.
That would be astonishing.
Right?
Especially in
I
such
don't,
a short window.
yeah. I'm not suggesting it's not possible, but what a massive increase that would be. Yeah.
Right.
So anyway, this is worth watching for sure. All right. Here's one that's always interesting, the Dow Jones Industrial Average. I'm kind of shocked that the thing still exists. It's a very weird average, and I'm glad now that newspapers and publications of all sorts don't really focus on the Dow too much anymore.
Uh-huh.
But it used to be the case when you asked how did the market do, people were talking about the Dow,
Sure.
right? I think that's changed a little bit in recent years, and it's probably a good thing. But they just added Amazon, and they took out Walgreens. So the chart here is showing it only took them, $178,000 gain in Amazon for them to recognize that Amazon might be worthy of adding to the Dow. They're a little bit late to the party. I think the Dow committee gets its news like 15 years later.
Yeah, right.
Right? Maybe they're reading old newspapers. It's taking them a while to catch up or something. I don't know. But a funny thing happens is when they remove a stock, and they removed General Electric to make way for Walgreens.
Oh,
If you
interesting.
track GE's results since they removed it, it's actually done slightly better than the Dow average. And Walgreens there, you can see it's down 58%.
Yeah, yeah, yeah.
So their track record of, adding names and removing names isn't so good. This is one example. I think there are probably many in the history of the Dow,
Sure.
right? Like when they added Cisco Systems, might not have been at the right time.
Timing is everything.
Timing is everything, even in an index.
Yeah.
Yeah. So the other weird thing about the Dow is that they use a price weighted mechanism instead of market cap. So Amazon is going to be 2.9% of the Dow index because its price is $175.
I see.
Okay. Whereas United Health at a $525 price is 8.8% of the Dow. It's the largest weighting in the Dow is
Huh.
United Health Group. Now, compared to its market cap, it's more than double. It's 5.4% more than its market cap.
Yeah.
And on the flip side, Microsoft, its market cap weight would be 21% of the Dow, but by price only 6.8%.
Wow.
So Microsoft is massively underweighted in the Dow, as is Apple, and as will be Amazon.
Right.
And there are a few other names that are slightly underweighted, but there's a lot of companies that are quite overweight in the Dow versus their market cap.
Huh.
So this is really maybe just a little bit of a history lesson more than anything. It's maybe not so relevant to today, but just
So I wonder then if we went back in history, would PEs have been so dramatically skewed based on growth? Would
in
we
what
would we have had the 80 PEs and the 100 PEs even the 60 PEs back in the 30s or the 40s or 50s?
Yeah, it's a good question. I don't know.
I don't, yeah.
My understanding is the Dow actually has done a pretty decent job over the long term of approximating the return in like the S&P 500. They're actually more similar over a long period of time than they are different.
Huh, okay.
So the price weighting mechanism over a long period of time hasn't been terrible. Maybe because it might help them avoid a company that becomes a big market cap and then subsequently comes down.
Right,
And by not overweighting that, then it has less of an impact than it might in the S&P 500.
right, right.
Right. Think of AOL, for example. It went sky high and then came down. The
Right,
S&P kind of rode that peak and down, whereas the Dow, if it was in the Dow, it might have been different.
right, right.
Um, and some companies I believed are encouraged to split their stock just for the very reason of kind of reweighting their
Oh,
weighting in the Dow.
on the Dow. Okay,
Yeah.
okay.
So another thing that we've seen is that there's not a whole lot of stocks outperforming the S&P 500. And in fact, since they've been keeping data on this back to 1994, this is the lowest percentage on record. So only 24% of the members of the S&P 500 have outperformed the index over the last year.
Wow.
All right. And so previous low was June of 1999 at 30%. So again, this shows you that there's just a few big companies driving the index.
Hmm. And it's
Okay.
been as high as 84%. So the dot-com bust, you went from the low just before the bust to the high just after the bust.
That's
So
right.
a bunch of companies, obviously, that were controlling, like we have now. Or maybe you were going to be making this point.
Well, I'm quite happy for you to make the point for me. I'm glad that you see that. Yeah.
I see. Yeah. So, and when all those companies that were way overpriced got blown out during the dot-com burst, then you had the regular folks making up this massive contribution to the overall S&P right after that. So interesting.
That's right. If you remember, after the dot-com bust, there were a lot of value stocks that did well,
Yeah.
right? The air came out of the growth stocks, value stocks did well. So the average company outperformed the index because the index was being weighed down by the decline of Cisco and
Right.
those bigger companies.
Right.
Now, in 2009, the average company did reasonably well, not because it went up, it just went down less than the
Right.
market did,
Right.
right? The market had dropped more than 50%. So, outperformance can come in different ways. It's just going up more or down less than the market.
Right.
Okay. So this is worth keeping an eye on. But again, we're aware of there's a few big companies driving the results in the market right now.
Okay.
And to drive that point home even more, this chart, this is year to date that we are now calling Nvidia and the Fabulous Three. We've got a new name every week. So I guess you can call them the Fabulous Four, I guess.
Right.
Nvidia's contribution to the S&P 500 year to date, as of I believe this is March 11th, if I'm not mistaken. Sorry, March 8th. March
No,
8th.
today's the 14th.
Well, yes, but this date on this
Oh,
chart.
on the date of the chart. I'm sorry.
Yeah. Again, not my chart. So if it was mine, it
Right.
would be up to date as of the last minute.
Yes, yes, yes.
But because I'm using somebody else's, they're not as current. Anyway, Nvidia has accounted for 2.6% of that 6.5% return,
Yeah.
March 8th. And if you add in Amazon, Meta, and Microsoft, there's another 1.4. So collectively, they account for, the majority or,
Right.
large percentage
Right.
of the Nasdaq's, the S&P 500's return so far this year. Okay.
Yep. Yep.
Now, I always say, okay, this is great. This is great information. You can scare people with this and say, look, the market is being driven by just four companies. Oh my gosh, this is a dot-com bubble all over again. But is it? And so what I think is worth looking at is kind of some fundamentals. Let's look at earnings. Over the last year, 60% of the earnings growth in the S&P 500 came from two companies,
Wow.
right? So Nvidia added $10.7 billion of net income to the S&P 500. Amazon added 10.3 billion of net income. So they accounted for 61% of all added net income in the S&P last year. So is it so surprising, perhaps, that those stocks are doing so well? And
And
go on down the list, and the next one is Alphabet, Meta, Apple, and Microsoft. Those six companies account for 80% of the earnings growth in the S&P last year. Six companies out of 500,
yeah.
right? Um, so that's kind of amazing. So maybe their performance is somewhat justified if they're achieving the majority of the earnings growth.
I think my read on that has been that no thinking person thinks that these stocks are in a bubble, given their PEs, given their earnings growth, as you just pointed out. The question becomes more like, do we want six companies to be controlling that much of the wealth in the country? But anyway, yeah.
Yeah, I think is it good or bad? I think is a different question and
Right.
certainly worth thinking about
Right.
for sure. We talked last week about how the top five companies in the market accounted for about 25% of the S&P market cap.
Right.
And we compared it to other countries in the world, and we said,
Uh-huh.
oh, it's not so bad.
Yeah.
Well, here is the same thing compared to the S&P over time.
Ah,
So the red line there on the right, 2024, 25.62% in the top five names. Go all the way to the left, back to 1964, the top five was AT&T, General Motors, Exxon, IBM, and Texaco.
huh.
And they accounted for 27.6%. So to your point about is this good or bad, in my view, this kind of works itself out over time.
Well, we did have AT&T get broken up. So that
Yeah.
was part of the reason why they were no longer in the, and I guess nobody else was broken up after that. We had General Motors get crushed. Texaco must have gotten bought.
Yeah, it was Amoco and Texaco merge,
Something like that. I forget. Yeah.
and then Amoco was bought by BP, is that right?
You're ahead of me on that one. I wasn't following the oil patch that closely.
Yeah, I forget as well. So I'm sorry if I'm offending somebody with not getting my facts right. Don't remember.
And
And we
then
certainly,
before the dot-com bubble, it had gotten to a low point, a very low point. Interesting.
yeah. So maybe this was the period that wasn't normal,
Yeah, yeah,
and this is more normal than we realize.
yeah.
I don't know. To me, if it's warranted by the fundamentals and the earnings power of the companies, then so be it.
Sure.
But yeah, there's risks in having, just a handful of companies be so dominant for sure. It also shows investors, and again, nothing I say today is investment advice,
Right.
but it shows investors that the risks of being out of certain names, right? Let's say you don't like the CEO of Microsoft, Apple, Nvidia, Amazon, or Alphabet,
Right.
and you don't buy them because you don't like the personality.
Right. Right.
Well, you might be introducing a lot of risk into your portfolio,
Right.
right? And some people find that whether it's Tesla or other names, where they just for whatever reason, non-economic, non-fundamental reasons, they don't own certain companies.
Sure.
It can create a risk sometimes. So anyway, I thought that was interesting.
Yeah, absolutely.
The other thing that's going on is a decline in the number of publicly listed companies.
Wow.
So if you are the Wilshire 5000 that has 5,000 companies in your index, you're 500 short right now.
Wow.
They can't find 5,000 companies anymore. Okay. They used to
So,
have to be selective. Now they'll take anybody.
So to Elon's point, it has become less beneficial to be a publicly traded company. And this is great evidence that this is a known fact.
Yeah, it's been happening for a while. In fact, you could say the biggest decline happened, in the 90s and early 2000s, I suppose. But
Right.
yeah,
It's basically dropped in half.
yeah, yeah.
Wow.
So that I thought was interesting. All right, let's talk about inflation. This is an interesting chart from Jeffrey Kleintop. And what he does here is he takes CPI in orange and then takes the PMI index, the Purchasing Manager Index, which is kind of a leading indicator of where the economy might be going.
Mhm.
And he pushes that 6 months ahead. And so there's a 6 month difference between the data and the blue line and the red line, because
Mhm.
inflation takes a while to filter through the economy and
Sure.
appear as CPI.
Sure.
And what he's saying here is that CPI generally tracks the PMI index pretty closely. And in recent months, you can't even see the orange line because it's right underneath the blue.
Yeah.
And by this chart, because the blue's continuing to go down, he thinks that inflationary pressures will continue to ease. Now, again,
Until this morning.
things change month to month, yes. But anyway, it's yeah. There's bumps in the chart for sure. It goes up and down.
This is extremely interesting to me because I doubt whether 1% of the I doubt whether 0.1% of the population has ever paid any attention to this chart at all. But there have been studies and studies and studies done, not only in the US, but in foreign countries, to see whether their PPIs would predict their CPIs. And the studies have all turned out to be inconsequential. They couldn't prove that there was this relationship. But this particular chart would suggest that this would be the proof that they've been looking for. So interesting that, a study that I did like 4 months ago didn't have this as part of this seems like an obvious correlation, an obvious way to plot it.
Perhaps. And maybe there's some monkey business with the data. Maybe if you go back to 2005, maybe that messes up the pretty chart here, or who knows? There's probably other ways of looking at this that might throw some doubt into this relationship.
Well, so at the time I tried to figure out why wouldn't the PPI predict the CPI? And there's a whole bunch of, first of all, they're not measuring the same things.
Yeah.
But second of all, you have a lot that can happen in that 6 months. So you can have inflationary activity going on during the first part of that 6 months, and by the time it's got through to retail, you could have a crash. You could have a problem in the economy. You could have reasons why you can't pass along prices. There's
Right.
also a lot that happens between the stages. That's why you have a short-term, intermediate, long-term on the PPI, is because you have the stages as it's going through. As the pig is going through the python, you've got these stages. And so while it's still in manufacturing, when it gets to wholesale, when it gets to retail, when it gets to the consumer, all kinds of operating forces, as well as, like, let's say, for instance, maybe transportation has no inflation, and there's a lot of transportation on food products between production and getting to the shelf. So if there was no inflation or deflation in transportation during that 6 months, you might have a completely different thing happening on the PPI than you would on the subsequent CPI.
Good points. And I should just clarify here, just to make sure, we're not talking about PPI here. We're talking about PMI.
Oh,
This is the Purchasing Managers Index
Managers
rather than
Index.
producer prices.
Oh, interesting.
So
Okay.
something slightly different, but
Ah.
it's more measuring sort of activity rather than prices.
And actually, though, expectations based on a survey as
Yeah.
opposed to hard data. Okay.
Yeah.
Okay.
So take it for what it's worth.
Yeah. Yeah. Interesting.
Speaking of inflation, we've all felt the food inflation in the last year or two. And apparently in 2022, people spent about 11% of their disposable income on food, which is the highest since 1991.
Wow.
And what a jump it was, sort of from pandemic lows up to that level in just 2 years.
Right.
Now, not only have prices of groceries bumped up, but the same thing with dining out.
Right.
So we've
Right.
hit on both sides.
Yes,
Yeah.
and if you go back again to my youth, I think it might have been as high as 11%.
Hmm.
So this is for folks who wonder why the price of housing is so high. This is the Randy Kirk analysis. I'm not sure that anybody else has done this analysis. Maybe you'd like to look for some charts. In the 50s, we were paying roughly twice as much for personal transportation as we are now, but not in the way you think. We only had one car, and today the two cars are using the same percentage of our budget. So two cars, and the amount that you drive two cars is now the same as you would have had one car back then. If you may or may not know that, for instance, tires only lasted about 10,000 miles. Oil changes had to be much more frequent.
Yeah.
The entire car only lasted 100,000 at maximum. You got rid of it before 100,000. So all kinds of things have reduced that cost. We've talked about televisions before and how much they've come down for the same value of what you're buying. So, but if you start going through all of the prices of what people or the percentage of budget that people had in the 50s compared to today, well, a lot of the necessities the percentage of budget has gone way down. That frees up cash in your budget for something. And so you now have more supply, more cash to bid for housing. And that became the one thing that if you don't have enough supply, then there's tons of cash in the budget left to bid it up.
Well, that's right. And also in the 1950s, I'm sure they were saying we need to free up cash in our budget for video games and Netflix.
Yeah,
They were preparing for that decades ahead of time.
that's true. Absolutely true.
Yeah. You'll like this chart. This is a nice long time frame for the Bloomberg Commodity Index. Now, this index is fairly heavily oil weighted, but
Okay.
the index level today is the same as it was in about 1980.
Is this inflation adjusted or not?
It is just the index level. Is this
Not.
inflation adjusted? This is inflation adjusted.
Okay.
I anticipate your every question, Randy. So if you inflation adjust it, then it's the same as in the 1970s,
Wow. Yeah.
early 1970.
Yeah. Kathy Wood has been making this point for a couple of months.
Yeah.
This is really rather amazing. Now, she points out that part of it is probably due to the fact that our extraction methods are just that much better. So, the technology has helped to keep this down. But the other aspect is, the entire world is now more services oriented than it is goods oriented. And
Yeah.
so you're going to have downward pressure on the price of goods.
That's right. And these are actually her charts.
Oh, okay.
Yeah. Again, none of these charts are my own today.
Okay.
Speaking of extraction, let's look at the lithium prices.
Yeah.
And this is pretty amazing turnaround. And this is a big reason why the price of Teslas have come way down.
Right.
You may have seen that chart that shows the used price of a Tesla or even the sale price of a Tesla. It looks pretty similar to this chart in many ways.
Yeah.
So this is a good thing long term to keep these prices down. So an 80% drop from its peak.
Yeah. My expectation, and it's based partially on the work done by Jordan Giesecke, is that we will see these prices beginning to go back up, certainly by the end of 27.
Mm-hmm. Yeah, like a lot of commodities, they'll bounce around.
Yep.
Yep. All right. Now, completely changing the subject. There are 12,000 plus people turning 35 years old every day in the United States.
Okay.
And this may be to your point about housing, why housing prices could be strong in the years ahead, as these folks form households and build and buy houses. So if you remember, a few years ago, we were talking about 10,000 people turning 65 a day.
Right.
This is an even larger number turning 35. So I just thought this was an interesting image of our population by birth year,
Right.
right? And so the pig in the python, so to speak, right now is at that sort of 35-year-old level.
Huh. Okay. Yeah. Super interesting.
Okay. This is an interesting one. Manufacturing construction spending has hit a new high.
Wow.
So it's up 130% in just the last 2 years. $225 billion has been spent.
Now this would be all forms, private construction, business construction, home, government, infrastructure, everything.
Well, this is manufacturing construction spending.
Manufacturing construction spending. Huh.
So is this perhaps evidence of the reshoring trend and
Yeah,
bringing
maybe.
manufacturing back? We're certainly spending a bunch of money on semiconductor plants in the United
Yes.
States.
Yes.
That could be part of it. But this is just an interesting chart. It's a pretty massive increase.
Yeah, I'm going to guess this is a lot to do with these bills that were passed by the recent Congress.
Mhm. And then the other thing that's maybe a bit related to this is Mexico is now the largest trading partner with
Yeah,
China.
I read that.
I'm a little disappointed that Canada's not shown on here. I think Canada also is pretty high.
They have been, yes.
I don't know if it's past China too, or it could be close. But for some reason, we're showing Singapore, Vietnam, Thailand, and Indonesia on this chart, which I guess is also rising.
Yeah, yeah. Yeah, there's no question. Singapore is such a small country, but Vietnam, Thailand, and Indonesia are not small countries. I'm also expecting that India would be showing up as well fairly soon.
Mhm.
And where's Japan? Interesting. It's interesting the choice that they've made on who they're
Yeah.
showing.
Well, I guess you can't show them all.
No, you
So
can't. No.
as a Canadian, I won't take, any slot that's not included. All right. Let's get to something that's a little bit painful to talk about.
Okay.
From 2000, the year 2000 through to 2023, US government spending has increased by 243% versus an 83% increase in overall CPI. So the government is spending money faster than inflation is growing.
Oh yeah.
Okay. So annualized spending increase of 5.3% per year versus 2.5% for CPI.
Right.
So the question is, where's this money coming from? Well, we just borrow it.
Right.
Uh, the national debt was 6 trillion in the year 2000. Now it's over 34 trillion. Right. So this is pretty staggering, however you want to think about it. And 34 trillion, actually looking at the precise number is a big number.
Yeah. Yeah.
There's a few commas in there. And this is from since the debt ceiling was suspended just last summer, not even a year ago, we've had a $3 trillion increase.
Yeah. Yeah.
So just borrow to your heart's content,
That's right. That's right.
right? As a percentage of GDP now, interest payments on the debt is now 3.7%. Now, that doesn't seem so bad, right? And particularly, it was pretty low in recent years, and now it's back up, but it's been higher before,
Uh-huh.
right, in the 80s. And so you look at this chart and you say, okay, it's not too bad. Well, I'll give you this chart. It's over $1 trillion a year. It's increased by 100% in just the last 3 years.
Right. Right.
So you may say, okay, $1 trillion, fine. That's not a lot of money anymore. You just showed me we have 34 trillion in debt. What's $1 trillion? Well, this is the problem. The government spends money on other things that we think are important. Social Security for a lot of people is critical. Medicare, critical. Defense, critical. Maybe they could be spending it, more, wisely, but whatever. I think we all agree defense is pretty critical.
Yeah.
Medicaid is pretty critical. So the net interest on the debt now is, we call it the third largest, tied for defense
Yeah,
as a budget item. And you can see the forecast.
right.
So this is interesting. This is worrisome. Okay.
Yeah.
So hold that thought from that previous chart. We'll come back to that in a second. This is a table showing various central banks in the world. Now, the US central bank is the biggest central bank, the Federal Reserve, but there are other central banks as well. And this is a table showing those central banks. Now, I have good news for you. The Bank of Argentina just cut their interest rate from 100% down to 80. It's on the bottom line in this chart. Whoops, sorry. I won't move my cursor. It'll take a second, that'll go away. There we go. Now, their inflation is a little bit problematic, 254%.
Right.
No, the decimal's not in the wrong place. It's 254%.
Right.
So that's why their interest rates are so high. So, we'll see if they can get things under control, but they feel the need to cut rates, even though their inflation is so high. Now, there are some other central banks in the world that have already begun to cut. Japan cut in well, that was January 2016. That's been a while ago. Sorry. Most recent one, I guess, is China, August of 23. Poland, October of 23. Peru and Czech in February of 24. Chile in January 24. Brazil and Colombia as well, and Turkey. Sorry, Turkey hiked 24. Anyway, we're starting to see some central banks beginning to cut. It remains to be seen when the Fed chooses to join that party.
Right. Right.
And when they do, other central banks will likely follow. Okay. Sorry for all the numbers on that table. All right. When I said hold that thought, this may help explain why Bitcoin is doing so well. Now, there's a number of factors I think we could talk about, but if the government is borrowing so much money and people are concerned about the soundness of our currency,
Mhm.
and it's not just in the United States, Bitcoin's a global thing, the soundness of the Argentine peso, the soundness of any of those currencies on that table that you saw previously. We had one day on March 12th where over $1 billion went into the Bitcoin ETFs in one day. Okay, and now these ETFs haven't been around very long now yet, right? And so this is just getting rolling. We've got 11 billion as of March 12th have gone into these ETFs.
Yeah.
And 1 billion in one day. So this may be a sign that people are looking for an alternative, and this may be the point at which this becomes a real thing rather than just a complete speculative asset. I don't know. I'm not recommending it. I'm just pointing it out and saying this is worth thinking about.
Right.
Right. And the United States, as great as we are and as strong as we are, we have our fiscal problems too, monetary problems as well. But imagine what it's like for people in other countries.
Sure.
Okay. So this is worth watching.
Oh, definitely worth watching. The big question, of course, for those of us who have no idea and don't pretend to know anything about Bitcoin is this where the bubble really is?
Yeah, it remains to be seen.
Yep.
Right. On one hand, you see the speculation. On the other hand, you can say, okay, if you're worried about the soundness of your currency, what do you do?
Right.
Right. What options do you have?
I was reading, I'm sorry. I was
just
reading,
going to say people in Argentina don't necessarily have the ability to, invest in the S&P 500.
right.
So this might be a way for them to get money out of their country. There was a good 60 Minutes piece recently where they were showing a lot of Chinese people coming across the US-Mexico border.
Yeah.
And they were middle-class Chinese.
Right.
And they were coming here, many people said they're coming here for freedom. Right. And how do they get their money out of their country?
Right.
All right. So it's a lot of cross currents here. It's not just the US in a vacuum.
Right. Yeah, a couple of years ago, I read a very long article by somebody who was talking about the problem of debt, whether it's consumer debt, government debt, corporate debt, whatever, that the problem of debt was eventually going to overrun us all, and it was going to bring us back to the 1929 type scenario. And the problem, as I read through the whole article, and it was well done, and it was not somebody that was, it was a very well-respected economist that was doing the work. The problem was there was no answer. There was no, he didn't say, oh yeah, great place to go would be gold right now. He didn't say, oh, great place would be commodities. I mean, you went through it. There was no hiding place. And so I'm thinking, well, what good did it do me to read the article if I'm okay, the world's going to come to an end, but you're not showing me where the fallout shelter is. So maybe that's what Bitcoin represents right now. Maybe that's to your point.
It does for many people, for sure. But there's also, in my opinion, a fundamental misunderstanding by a lot of people of what Bitcoin really is. And this may be a topic for another discussion because it's a long explanation, but
yes, right.
And it may have nothing to do with the word coin.
Okay. Yes.
Or money. Anyway, we'll continue to watch this. I'm sure this is going to be a hot topic for the next little while.
Oh yeah.
Changing gears completely. Starlink actually just announced today that they now have 2.6 million subscribers. Okay. Maybe actually that's what shows in this chart. So maybe my news source is a little slow. But anyway, if the average subscriber pays $120 a month, which I think is their lowest rate, that would be about 3.75 billion a year in revenue just on Starlink for SpaceX.
Just on the consumer Starlink.
Yeah.
Not counting the more expensive ones for ships and et cetera.
Yeah. So they might actually be closer to a $5 billion business in Starlink now. So pretty impressive numbers. They're just getting started really in this business.
Oh yeah.
So, all right. This is kind of interesting. The headline here is teenager driver's license issuance is going to fall to zero. And the idea with this is because the cost of insurance is now over $1,000 a month. And it would be higher.
$1,000 a month.
Yeah.
Oh.
Of owning and operating a new vehicle. Sorry, this is the average cost of owning and operating a new vehicle. So not just insurance.
Oh, okay, everything.
Sorry. $1,000 a month.
Okay.
The idea here is that for teenagers, it would be even more because the cost of their insurance would be higher.
Sure.
And it'd be even cheaper for them just to use Uber.
Right.
The number of rides that they would need, it might be enough in terms of not getting a car, not getting their license, just using Uber. Right. Now you could imagine that when autonomy comes along, whenever that is, that would further tilt the balance in favor of not bothering with getting a driver's license.
Absolutely.
All right. Speaking of FSD, I thought this was interesting. This is the shortest route in the lower 48 states in order to pass through every single state.
Okay.
So I'm suggesting to Larry that he take this route sometime and test it out in his car and see what it's like. Or if Scott doesn't want to accept my joke challenge, maybe he can try this in his car.
Well, and you've got Bradford out there right now. Maybe when he gets to back to the West Coast, he could run up to Spokane and start the trip.
Yes. Yeah. Now, I would say that whether FSD can ever be solved is in serious doubt because of this chart. This shows you the different symbols that are on signs in these countries for pedestrian crossing. Now, I don't know how FSD is ever going to figure out which way the pedestrian's going or, what is a pedestrian, but you can see that many of them are very different. Some are walking right, some are walking left, some are just standing there. So anyway, it's going to be hard for FSD, I think, to solve this.
Yeah. And that's just one of many issues.
I'm curious as to what some of the signs look like in Asian or even African countries. I'm
Yeah,
curious,
yeah, yeah.
you know, some of the differences. Anyway, all right, we're getting close to the end. You're bearing with me here. This is, I thought, kind of interesting as it relates to AI.
Sure.
In chess, there is a rating system that was actually invented by a Hungarian American. And his last name is ELO or ELO. I'm not exactly sure how you say it. But he invented this system for calculating the relative skill level of players,
Hmm.
what's called zero-sum games.
Okay.
So like chess, there's a winner, there's a loser.
Right.
Okay. And the highest human rating in chess is Magnus Carlsen in 2019, 2882.
Okay.
Okay. And you can see over time it's maybe gone up a little bit, but it's kind of plateaued. Now, the AI system there in the dark line, the highest rating, this is as of 2021, was 3581. And you can see it's gone up pretty steadily over time. There were
Yes.
some plateaus here and there. So, you know, if we doubt that a computer can be smarter than a human, I think look no further than this.
Yeah.
Right now, these AI systems have been optimized for playing chess,
Hmm.
but it shows you, I think, what's going to happen with AI in general.
Which I guess Elon yesterday echoed. Oh, I'm forgetting his name. Chris Chris Wall. Um, ah, the futurist.
Yes, and his name escapes me right now as well. I'm sorry.
Yes. Okay. Anyway, saying that it's not. We're probably not going to get to 2029, which had been the prediction for all these years. That he thinks that computers will pass individual humans next year, and pass all humans combined by 2027 at this point.
Yeah. Yeah, which would be quite remarkable. Now, this
That would be
this
remarkable.
rating system has been used to rate the effectiveness of large
Chris
language
Wall is right.
models.
Go
Right. So
ahead.
this rating system actually is applicable to not just chess, but also to large language models and other
Oh, yeah.
zero-sum games. They use it for football players and so on as well, football
Oh,
teams. So it has application in many different fields, not just chess. Okay.
yep.
And then here is kind of the if the first chart was the rise of Bitcoin, this might be the re-entry right now of Tesla. I don't know. Anyway, it's a great image of the Starship, the plasma burn from today. I thought it was
Yeah.
we've never seen this before.
Yeah. Absolutely fantastic. Absolutely amazing. And shockingly, of course, I went to Apple News about just before we went on the air to check it out, and the Starship launch getting into orbit was only third in the news. Um, at the very top was Kamala Harris going to an abortion clinic for the first time. That was more important than this massive breakthrough in tech that is going to absolutely change life on Earth.
Yeah, or it's just another billionaire blowing stuff up in space.
Yeah, yeah, whatever.
Yeah, no, it's impressive, and they're making progress with every attempt, and I'm looking forward to the next few this year.
Oh yeah, there's going to supposed to be, I think, 8 total this year, and I think we'll have one maybe within 3 weeks testing again to see if they can get some of the other things they need to test before they can actually start launching something of value.
Yeah, no, it's exciting.
All right, Cern. Well, that was quite a potpourri of interesting stuff, primarily on the economy, and but as always, I don't know. There's folks out there like you and like me that for this stuff, these kinds of stats and whatnot, analysis is almost like candy. It's just way too much fun.
Well, those 9 people will be very happy today.
Yeah, yeah, yes, and Scott, remember, you're on call. You're on.
Scott,
It's
I'm waiting. I've been waiting for a week now.
so. All right. Well, we'll get a stand-up group together and we'll see what happens with that. Cern, great to have you on. Appreciate you so much. And
My pleasure.
until next Thursday, this is Thursday. Until next Thursday, it has been great talking to all of you out there. Well, no, wait a minute. Let me rephrase all of that. Cern, can't wait to see you next Thursday. To all of you out there, I'll be seeing you at least once more today. And who knows, could be more. It's been great talking to you.
Sounds good, Randy. Take care.